Hi grade 9s, we're going to have a look at the general ledger today. So I'm going to be using activity 5 just to demonstrate, what the general ledger is about and revise what the general ledger is about. So the task reads, post the cash receipts journal and cash payments journal to the general ledger below of MP Traders. Now they tell us the following balances appeared in the books of MP Traders for June 2021. So if we look at the following balances, as it stands, the balance for capital is 81,000 Rand. Okay, the balance for drawings is 11,000 Rand, meaning that up until that point in June, 11,000 Rand has been drawn out by the owner. Okay, 74,500 Rand has been spent on vehicles, 32,000 Rand has been spent on equipment. Bank, they've left blank, which poses a slight conundrum, which we'll solve later. We then have trading stock, again, the amount of trading stock we've purchased, and so on and so forth for the rest of our accounts. So let's get rid of this highlighting and we'll go account by account. If we have a look, they give us the CRJ and CPJ. In our CRJ, we have columns for sales and cost of sales. We then, in sundry, have capital and current income. Remember, when we have current income, our detail should be, and I don't know why I'm writing it in, our detail is services rendered. Okay, in this case, it should be services rendered. Right. Anyways, we go back now to our CPJ. We've got payments and columns for trading stock, drawings, and wages. And then under sundry, we've got a number of transactions that occur. Consumable stores happens twice. Sorry, let's just get a highlighter. So special mention to consumable stores as it occurs twice. And everything else happens once. So if we look at our general ledger, first and foremost, we need to title the general ledger. So this is the general ledger of MP Traders. Okay. Now we have two sections in our general ledger. The first being our balance sheet section. The second, our nominal account section. Now, in our balance sheet section, we have our assets, our owner's equity, so our capital and drawings, and any liabilities that we might have. Okay? It's important to note that we start off the month with balances. Okay, so in the balance sheet section, we have balances, only with our assets, owner's equity, and liabilities. Okay, we then have our nominal account section where we have our incomes and our expenses. Okay, now it's important to note that at this stage in grade 9, we only ever use one side of our nominal account section. Okay, we also start off the nominal accounts with a total as opposed to a balance. Now, if we remember our AE oil rule, and I'll draw it up here, we have our assets, expenses, owner's equity, incomes, and liabilities. Now, assets increase on the debit side, which means they decrease on the credit side. Expenses increase on the debit side, which means they decrease on the credit side. We then have capital, which increases owner's equity, so capital would have a credit balance. Drawings decreases owner's equity, but we would have a debit balance for drawings. We then have incomes and liabilities, which increase on the credit side, meaning that they decrease on the debit side. Now, let me just for good measure, write in debit and write in credit. So now that we've got our AE oil rule waxed, If we go in and classify each account, we would start off. Capital is owner's equity and it's plus. So we would have our balance brought down for capital on our credit side. Okay? We then have drawings. Again, owner's equity, but it has a decreasing effect on owner's equity. So we would have our balance brought down on our debit side. Vehicles, which is an asset, it increases on the debit side and decreases on the credit side. We would have a debit balance. We then have equipment, bank, and trading stock, which are all assets, so they get treated in the same way. We'll get back to those. When we move to our nominal account section, we have sales, which is an income, which means we have a credit total brought down. Cost of sales is an expense, which increases on the debit side. We have a debit total brought down. Wages is an expense. Again, total brought down on the debit side. Trading license, again, expense. Total brought down on the debit side. Rent expense, an expense. Total brought down on the debit side. The same principle applies for consumable stores being an expense. Total brought down on the debit side. The last two that we have is stationery, which is an expense. So we use the debit side. And we have current income, which is an income. Incomes increase on the credit side, so we have our total brought down. Now, if we go back up and we have a look at capital, first and foremost, they tell us we are putting in the balances, or the balances appeared for June, meaning that we're going to start off with the month of June. Okay, so on the 1st of June, the balance brought down for capital was 81,000. So we stick in our 81,000, sorry. Now, as a business, MP Traders, if we were to receive capital, it would be from our owner, and that would take place in our CRJ. So if we go up to our CRJ, we can have a look. We do have capital, which takes place on the 1st of the month. Now, we would use the date as the 1st of the month because there is no column for capital. Okay? The amount was 180,000. So back in our capital account, we have 180,000 Rand that we have received in our CRJ. If we've received it in our CRJ, the contra account that we use is bank. Okay, so we write in bank and the date was the 1st. The reason why we use our contra account bank, if we have a look, and I'll use a different color, the amount 180 gets put under the bank column as well as the detail capital. So our double entry, account 1, bank at account 2, that looks like a blob, account 2 being capital. Okay, now we're not finished there. In order to total off and balance this account, we would need to add these up, which should give us, if we calculate that, 180 plus 81,000 should give us 261,000 Rand. That is capital done and dusted. Now, they have given us an extra line. For good measure, if you would like to, you can go in and say July the 1st, because we are opening this account again for the next month. Our balance brought down from the previous month is 261,000 Rand. All right. We then look at drawings. Now, again, we're working in June, so for all of our balances, we can go in and put in June the 1st. All right. The drawings balance that they give us is 11,000 Rand. Right. If the owner is withdrawing money from the business, we would find this in the CPJ. Now, if we go up to our CPJ, we'll see that we do not have a sundry entry for drawings, but we do have a drawings column. We take the total of the drawings column and we use the last day of June being the 30th, and the total was 7,920. Okay, so we put in our amount 7,920, 7,920. We have the date, which is the last day of June the 30th, and our contra account there is bank. Again, if we think about the double entry rule when it comes to bank, one account affected is drawings and the second account affected is bank. In our transaction analysis, that would be a minus. To close off this account, we would need to add these up, which should give us 18,920. Okay. Same as the previous one. For good measure, they've given us an extra row. We can go in July the 1st, have our balance brought down, and it's 18,920. Okay, so those are two owners' equity accounts that I've looked at, capital and drawings. I will look at vehicles. I'll go through bank and trading stock. Actually, maybe all of them. The balance that we get for vehicles, as stated above, was 74,500. Okay, I'm actually just going to go in and pop in all the balances first and foremost. All right, so if we have a look at our balances, so for vehicles, on June the 1st, we have a balance of 74,500 Rand. Okay, for equipment, again, it's an asset increasing on the debit side, decreasing on the credit side. We would have a debit balance, so on June the 1st, our balance brought down would be 32,000 Rand. In this activity, the bank has been left blank, however, it still is an asset. Now, bank is a funny one. Bank can have a debit balance or a credit balance. If we have a debit balance, it means, and I'll use green for this, we're in the clear. We've got money in the bank account. If we do not, we use a credit balance, meaning we're in bank overdraft, and that can thus be seen as a liability. Okay, but let's not overcomplicate it. So bank we'll get back to later on. Trading stock, same story. It's an asset that can increase and decrease. Now, again, we do two things with trading stock. Firstly, we buy trading stock, okay, which could increase it. We also sell trading stock, which could decrease it. So we'll have a look at both of those. On June the 1st, the balance, on June the 1st, the balance for trading stock it's brought down, B/D, and the balance that they give us for trading stock is 31,250. Okay, so like I said, we'll get back to bank later. Now, vehicles. You don't just receive a vehicle. So our vehicles, we pay for it, or we pay it off in portions, installments. We find that in our cash payments journal. So if we go up to our CPJ, do we have any vehicles? We don't have a column for it. However, we do have vehicles at 96,000 on the 13th. Okay, So the date that we would use in our vehicle's ledger account would be the 13th. Okay, the amount was 96,000 Rand, and the contra account there is bank. Because we're in the CPJ, remember, we almost always use bank. Therefore, we have a total of what should be 96,000 plus 74,500, which should give us 170,500. So up until this point, we have paid 170,500 towards our vehicle. Okay? For good measure, we can go July the 1st, our balance brought down from the previous month, and that's right above us, which is 170,500. Now equipment, same story. We don't ever receive equipment, however we pay it. Okay, money comes out of our bank, we receive equipment, 2 assets involved, plus minus. So we find equipment in the CPJ. If we go up and have a look, we don't have a column for equipment, but again, we have an equipment transaction for 29,940 on the 5th from Hazy Buyers. Okay, so 29,940 is our amount on the 5th, and the contra account there is bank. Right? What we need to do then is total it up. So how much have we spent on equipment? We have 32,000 plus 29,940, which should give us 61,940. Okay, again, for good measure, on July the 1st, we have our balance brought down from the previous month, and the balance was 61,940. Now, trading stock can be an interesting one, and this works similar to bank. So there was 2 things that we do with trading stock. Okay, firstly, we buy trading stock in order to sell more trading stock, so our trading stock itself would increase. Where would we purchase trading stock? In our CPJ. We also sell trading stock. Now, if we're selling items or goods or trading stock, we're receiving money, so we find that in our cash receipts journal. Now, the reason why our cash receipts journal entry is on the credit side of the ledger is because trading stock is an asset that decreases. Okay. First and foremost, let's go to our CPJ. We do have a column for trading stock. Okay. The total for this column is 39,180 Rand, meaning we purchased a further 31,180 Rand worth of trading stock. 39,180 Rand worth of trading stock. Where would the money come to purchase that? It would be from our bank, our contra account, and the date here is the 30th. Now, assuming we don't sell any trading stock, if we add up these 2 figures, we should get our total amount of stock on hand. However, in our CRJ, looking at the cost of sales column, we do sell trading stock. It cost us, or the stock was worth 27,256 Rand to us. Now, we have 27,256, and the contra account there being cost of sales, because we are looking at the cost of sales column in the CRJ first and foremost, but also when we purchase stock, we record it at the value we purchased it at. So the stock that we sold was worth 27,256 Rand. Now, this one is a little bit delicate because we've used both sides of the ledger. Now, firstly, just by looking with the naked eye, we can see that our debit side, the stock purchased and our balance of stock on hand, that total amount is bigger than the stock that was sold. So if we add up the 31,250, our balance, plus our 39,180, our new stock acquired, we would have 70,430 rands worth of stock on hand. That is assuming we do not sell any. However, we do sell any. We do sell stock, sorry. So we pull our total amount of stock that we have across, okay? 70,430 rand. And we put it in our brackets. We do sell 27,256 rand worth of trading stock. So what we do now is we subtract our sales from our stock on hand. So we take 70,430 minus 27,256, and that should leave us with 43,174 rand worth of stock to sell. How do we do that now? Well, this is our balance that we will carry down to the next month. So it's our balance carried down, and to open up for July if we have this amount of stock on hand. Let me just erase here now. We do have this amount of stock on hand, meaning that at the start of July, we'd have a balance brought down from the previous month of 43,174 rand. And that is how we close off a trading stock account. Okay? We then move to sales, cost of sales, wages, and our nominal accounts. So, like I did with the previous one, I'm going to go put in all of our totals. So on June the 1st, our total for sales was 47,580. Okay? We then had our total for cost of sales at 23,790, also on June the 1st. We had wages at 8,880. We had our trading license at 7,000. We had rent expense at 36,000. We had consumable stores at 3,100. We had stationery at 2,220. Also on June the 1st, and we had on June the 1st for current income, we had a total of 25,290. Okay, so now what we need to establish is where to look for each of these transactions. Firstly, sales being an income, incomes are in the CRJ. Okay, sales has its own column in the CRJ. The contra account used is bank. Now, if we go to our CRJ and we have a look at the total of the sales column, it is 54,512. So what we need to do there is we put in our 57,000. Sorry, I've forgotten this number already. 512. Now, all we need to do to finish off account is record the total of this. So 47,580 plus 57,512, which should leave us with 105,092. So up until that point, that is the amount of sales that we have made. Okay? We then look again, cost of sales. Now earlier on when we sold trading stock, we had a debit, or we credited the trading stock with cost of sales, and the amount was 27,256. Now, cost of sales and trading stock being contra accounts, we would need to, on our debit side, have our contra account as trading stock. We are getting this from the CRJ, and the amount was 27,256. Now, if we all have a look, okay, we have an equal debit and a equal credit. So our double entry principle has worked out, trading stock and cost of sales being contra accounts. Okay, to finish off our cost of sales account, all we need to do is total up our account. So 23,790 plus 27,256, and that should leave us with 51,046 Rand worth of trading stock sold. Alright guys, I'm going to leave the rest up to you. I have shown you an income and expense in the nominal account section, as well as looking at our balance sheet section. Okay? This exercise, and the last thing I want to leave you guys with, is they have given you a bit of a problem by leaving bank blank. So what you need to go through and do is add in all your debit balances and get a total for your debits, and add up all your credit balances and get in all your credits. From there, you would need to work out the difference between the two. And remember, in accounting, our equation needs to balance and we need to have equal debits and equal credits. So the difference between the two is the bank balance. Now, if we have a credit or a deficit with our credits, it means that bank will have a credit balance. If bank has a credit balance, we are in bank overdraft. If the asset, if our debits are smaller than our credits, it means that we have a debit balance for bank. Okay, the memo will be up on the website too. Please go and have a look at this activity 5 memo. Thanks guys, cheers.